Hello and welcome, as it is the second day of May 2019. My name is Derek, and we're looking at the number 29. What does this mean? Well, it was Ken Dryden's number as a goalie back in the 1970s, but it's got nothing to do with that. It could be millions and billions and trillions of different things, really. In fact, it could be trillions of different mathematical calculations I can get there, if not an infinite amount. But no. It's got to do with the markets, and well, I got a few things that it represents. The first, the number of times that the Dow Jones Industrial Average has either gained 50% or lost more than one third of its value since October 1st, 1928. So whenever this happens, you hit a number, meaning you either got to say it's at 100. You either have to go to 66 and two thirds or 150. Once you get to that number, then at that point, once you get to either two thirds of that number or 1.5 times the other one, it keeps going and going. But 29 times in the last almost 90 years, over 90 years, it has, or about 90 years, it has done that feat. Now, as far as the GRS, I'm not going to try to pronounce that coin, but the GRS cross with BTC, well, it has either gained 50% or lost one third of its value, of its amount. And from January 29, 2015 through October 25th, 2016. Spanning. So it took the GRS BTC cross 635 days for what the Dow Jones took about almost a decade. Of course, in the crypto market, the levels, the volatility is pretty high. I guess what I should have done, I don't have it here, is calculate how many times Bitcoin has actually done this move, and I can in time. But the ratio of GRS and DGB, Gigabyte, was able to have this many days where price action gained a 50% or lost a third in under 1 year. It took 351 days for that number, taking one of those GRS and dividing it by the other. Doesn't matter which one you divide one by the other, because 50% up and 33.333 with all the threes forever percent down is technically the exact same polar opposite move. And from January 2015 through March the 24th of this year, the reason why I don't have the last 5 weeks of data is because I just haven't downloaded it, and that's the last time I think on GRS that I had it. But through that time, the DGB BTC cross has either went up 50% or down 33% 48 times, where the GRS BTC one, which is more volatile, obviously, having 75. But the ratio of one divided by the other is 92. As I talk about, putting two coins together is going to increase the volatility even more so. And they are already massive as it is to begin with. The average volatility, which takes the last 20 days, I want to know what the 20-day closing high and closing low. These are not intraday levels. These are all closing prices. So its volatility is even higher than such. But within it, taking the 20-day closing highs and lows, high minus low divided by low. The average for DGB Bitcoin is about 75%, a little under 100% on the GRS cross, and 131% is still the average. And the volatility has been significantly low, mainly since May the 1st of last year, about a year. Once that April Fool's rally, April Fool's, yeah, of 2018 came to a completion, a sleepy halt of volatility has came into play. And by viewing a little bit based on the chart, this is each time it did such. Every time it had one of those moves, it would go up a notch. This chart can only go up; it can never go down because it's a running count. So there were times in here where this red line wasn't going up at all. Well, that's incredible, a long period without little volatility. But in here, here, and here, we can see it coming to a slow period. We had a big run up here, big rate of ascent here, slowing down in here as well. This got a little slow on the yellow line from here to here, and had a nice little pickup, slow period in here. It just took a decent amount of days, this case, for it to have moves of significant values. And here we go. Is this the end of the volatility? Is this a halt period? And that's exactly what I think. It's just well, I don't like using remission, but just not just in halt, I guess. I don't know what other better word to use. So lack of better terms. Because overall, with what's been going on, and I'm going to use Bitcoin. I'm going to put Bitstamp up now. And it looks like I'm going to have to look at this whole tether thing because this is catching my eye right now. 5,700 on the Bitfinex one. It's up 1.5%. When these are up 0.2 thirds. So it's an additional 1% gain on Bitfinex. So we'll take a look at this and the tether. There's probably some news of some sort. I don't know. I know they say they have something like 70x% of their tether actually backed. But of course, during the since like May right in here, since this market has been in the decline, there hasn't been as much volatility along the way, at least amongst the altcoins. And looking at the GRS one, we look at this basically from May 1st of last year, which would be basically cents in here. This is when the overall volatility got lower. Now, amongst this, all of these, like this move in here, this stuff going on, that really hasn't happened. The best move we have had has been that just this last most recent one. We've been getting a lot of this in cryptos. Just markets just grinding small, having legs lower like this. And that's just been the way it is. The volatility has not been anywhere where I would like it. However, my feeling is seeing Bitcoin prices rising through, or we're going to be getting it in a bull market run that's only going to cause such. As to me, it's all about a supply and demand issue. Supply is extremely small, and demand to be that of extremely high during, of course, the positive cycles. Bitcoin going to 7, 8, 10, 12, 14,000. That's going to spark a lot of demand, and there's going to be a lot of this demand in altcoins. Now, how do I say this on a literal level? Well, supply in a market are nothing more than orders. That's it. You can own however many of what coin you have. But if you have them on your hardware wallets or even on your exchanges without an order, they're not part of the supply that's available on the market right now. And if you put orders in, like, oh, I got my GRS, it's at 67. I'm going to put in, let's just say I recently bought 1,000 of these. And I'm going to put a sell order in to sell 200 for, say, 94.50. And I'm going to take those other 800 and I'm going to put them to, say, a hardware wallet. Well, now 200 are for supply. And one reason why I would rather do that is because, well, and they're just safer there. And, well, I suppose I don't even need to have a sell order in here, period, in this at all. I'll just wait for the price action to get there, and when it does, I can then make a trade. But when you are the person doing that, meaning the price goes all the way up to these levels in here, and then you look and you think, oh wow, it's there. In fact, you hope let's just assume it's even at 10.9. That's what you were hoping for, that if it got above it, it got at least nicely above it, maybe even 14, 16, whichever. But regardless of what that price is, here you are maybe putting 200 or 250 or 300 of whatever coins you got. You're taking them from the wallet. You're depositing to Binance or Bittrex. And then they get there, you take them, You look at, say, 10.8 to, and you see this is the bid ask. You're like, well, I'll just sell it down at 10.820. The person wants to buy, say, 495. I got 200 for sale. Boom, sales, trade's done. And then whatever you do with your Bitcoin after that is what you do. But you were a demander when you did that. When you were the one that sold the market, you you purchased the coins, and and what you do with them after that, well, so be it. But the person who put the order there was the one that had the supply. Now, one of the things I've talked about before within exchanges over and over and over and over again, and that's still fine to do, is to put your entire amount in sell orders. So I buy this at 67. So I'll put an order in here, and I'll put an order here, and I'll put an order there, and everyone, and all these different places. And that means 100% of what I own is available in the supply. Some of it is a long ways away, but, and then you have your buy orders in. And if you have more orders in, the more people that would do that, well, the larger the books would be. And well, that would stop all of those monstrous moves. And one example I like to put, if I was a big investor of a company, whether it be because I'm working for the company or whatever reason at all, but I am the monster biggest player. Well, I could literally stop the volatility in a heartbeat, because if I'm putting a lot of these available in the supply on short term, mid term, long term levels over and over and over again, my first objective would be to pick away at that spread, 3%, 5%, 2%, whatever percents I can get. But just continuously put orders in over and over and over again. And essentially, what I would change is when you have a situation where a market does this, and we'll say this is 100, this is 5,000 on, and then on a log scale, this is whatever this is. We'll just say this is 500. Well, if I were to start in here, and it would be like, okay, I'm in now charge of, I'm doing this investing strategy. Well, instead of this getting to 5,000, there might be a good chance that all this might have got up to might have been like, say, 2,000. But then at the same point, it might have only fell down to like 850. Because on the way up, I would have had so many sell orders available, more than what the market had, and thus, for the amount of people that were in demand of this coin and were able to buy it, well, they only were able to buy it up so much. And then the same thing with the sell off. So that's overall why the crypto volatility is really big. And with what's been going on with exchanges over and over again, and just the lack of trust that a lot of people have, but more so the amount of trust they have controlling their own private keys, then the volatility in the near term, to me, has no chance of coming to a stop as far as having these big moves. Now, GRS has been having big moves over and over and over again. This is one of my favorites as far as extreme major volatility, because when we can look at just how some of these moves are, having days where this thing has a 2x move is like common. This one here was a 3x move, but it's, or anything of that nature of 2x. Like, what's this day here? 55. There's a 2x move here. Even this is like 58 to like 83. What's this? 55, not quite 2x. Here's this move here from 55, and then in the day it was almost 2x, but a 2x move on like a 2-day period. How about this 2-day period? Or we went from 10, the 2x move on a 2-day period here, a 1-day period. This one had a 2x move. On this one day, it had a close to a 3x move. And yeah, a 3x here and a 2x there, that doesn't look right. Well, volatility on this chart isn't the greatest. No, excuse me, logarithmic wrong words. Logarithmic viewing is not the greatest. Here's a spot in here where just from 6600 to 16 didn't take long at all. From this green candle low of 59 change or 6,000 goes up to 13,000. That's a 3 day move. And then this move in here, I mean, come on, like this is just magnificent. October 27th, you can see on this in here, you got like a low of 1770. The next day it has a high of 94. The next day it pulls back to 44. The next, I mean, that's just magnificent volatility overall. Now, one thing I like about this, and this is interesting when I look about this versus DGB, is this better than DGB in that? Well, first of to me, these are coins that are like, I mean, their volatility up and down moves are just magnificent. But where does and where does not DGB trade? Let me just put this on auto, go to here, and let's take a look at where this does trade elsewhere, and that's on Binance. And they got the coin. Now, Binance is really strict in the coins that they want. They say, at least when you read it, and that they do the damn best job that they can to try to eliminate any of the scam coins they can possibly find. So the fact that it manages to make it to the site, well, that to me is just that in itself is like, well, maybe moving forward, this is still a fantastic coin. But why is DGB not on Binance? Is it a privacy coin type? I don't think it is. It's a fork of Litecoin, I heard even. But I just know that DGB has had historical great moves. But when we look at it, it's at lows not seen in quite some time against Bitcoin. It's under 200. It's just had another one of those major volatile moves where lost it's lost a third of its value, 48 to 120, that'd be 280, twice during this run. It's lost half of its value twice, going from 4 to below 2. When we look at the history of 200, well, 200 was above, this held above 2, this held above 2. We can see the red line. We are at levels not seen since the 2017 lows. But that's what these markets do, is have these up and down movements. And when you look back at historical points, you'll say to yourself how cheap these things were. For this was at 180 at one point, and it was down to 22. You're like, man, it's went down so much, it's over. I mean, why would I want to get into this coin? And it's just obviously got its ass kicked. It's pretty much worth nothing, and then next thing you know, what was pretty much worth nothing at 20 Satoshi was worth a lot more at 2,669. It's worth a lot less now. But its volatility has always had some sort of playability within it. Since the key point that I've been looking at, pretty much it's roughly around May 1st across the board in here. This was a volatile move. This was a volatile move. Right in here, it lacked volatility. A grinding down move, meaning this type of 5, 6 period red move down should have happened in a day or two, or could have doubled that in 1 week, is another way of saying it, or it could have been 1 week. And then all of this lackluster volatility. And overall, even this move in here, when you consider a 4 candle rather, a 4 candle move for something that not quite doubled, and what has been a 6-7 red candle period move for what has been a 2x move. I mean, this red candle here had a high of 585, low 412. That wasn't half off, but high here is 585, low here. You know what? Again, a lot of the volatility is lacking in here. So it's not too bad, but there has been times, of course, in the past where we get big volatility and then it stops. And it wouldn't surprise me at some point that it's going to come back, and it's going to be these up and down wave cycles where you go through maybe 100 days where things are pretty good. You go, okay, using this 50% up, 33% down, maybe over 200 or maybe over 100 days, it happens like 4 or 5 times. And then you get like a 40 days, 50 days stretch where it happens like all the time. And within it, like 4 days in a row, 5 days in a row, you're trading like every day. And then you get like another 100-day period where it's okay. And then you get a 300-day period where it's not, where nothing goes on. And that should just keep on going into, coming into place. But as far as transaction money is concerned, there's three places to put money as far as I look at it: fiat currency, cryptocurrency, and precious metals. And fiat currency, well, not a, you need to have it, but how much of it do you need? This game here allows me to trade the volatility. I mean, I can't do that with precious metals. So the whole part of the game is when I show again the volatility nature of these coins at a mathematical level. There's just too much of it for me not to, and the possibility of 100, 400, 1,000. When you consider trading markets within such that have this kind of volatility moves, getting in back and forth, but not only that, but understanding that if you realize this ratio, there's times where I can trade this, and there's times where I can trade this at different periods. Meaning, yeah, whenever the ratio has its big moves, it goes from 2 to 3. Okay, there we go. Or it goes from 2 and it goes down to 140. I think that's one third of its value. Then so on, and then that's amazing. But I can do more than that because what happens if, say, market one goes up 4 times in, say, 3 days and market B goes up 2 times? Do I really want to sell this coin for this coin? No, I want to sell this coin for Bitcoin and this coin for Bitcoin. Same thing on the way down too, when they're all going down. Tim, I've talked about this before. I'm just trying to find ways of increasing volatility that is already big to begin with. And then when you consider the mathematics on it, you got one, how many times can you increase your bankroll? So let's just assume you have like, and what I mean by that is you have so many DGB and GRS over, say, a 200, 500, whatever day period. Maybe those numbers are 5 times higher. So that's one way. The next one, and you want to do this on peak periods, and these next two are usually together on peak periods, is when your coins are in good up states. How much times higher are they against the price of Bitcoin, say from this time or whichever time before? Is it up, say, 4 times on average? Well, that would be 20 times when you times the two together, because you have 5 times more of the coins that are worth 4 times higher. And then we'll say Bitcoin prices from this point. Well, let's say we'll talk about when they were 4,000. Well, now Bitcoin's back to 20, so it's 5 times higher again. That's 100 times gain. And then, of course, you can even get higher numbers than that, where, okay, maybe you increase this 15 times, maybe this is 6 times, and maybe we're not talking, well, that would be 15 and 6 would be 90. And let's just say the Bitcoin price is 12 times higher. Well, then that's over 1,000 times now. Thank you for tuning in. Have yourself a great day. Bye bye.